weekly installment of Trading Tuesday. We are joined again by Kenny and Alejandro. Kenny and Alejandro, thank you guys so much for coming back for another week's episode. How's everyone doing?
Phenomenal, man. Doing real great on this side.
Nice. Doing good.
Awesome.
Tired on this side, but it's doing good regardless. I'm just I'm done with this rain and some other things. But, you know, crypto market right now looks actually looks bullish in my personal take. But
yeah, man, the markets right now kind of stalling out, running out of a little steam here. But I mean, hey, we're still above what 8.8K. So
short-term bullish, but we're gonna go sideways, I think, for quite some time.
Yeah, I think we might spend a little bit of time chopping back and forth there. Definitely.
Accumulation.
What'd you say?
Accumulation.
Exactly. Just time to stack sats and chill, man, instead of worrying about the daily price movements every single day. Gotta just keep them stacking up. Yeah, so Kenny, did you want to kick it off with a few different topics, just continuing off of what we talked about last week?
Oh, yeah. So right now I have my Bitcoin chart set up, right? I have that nice, and we'll go ahead and review. I have everything set up from last week, so it'll be really cool to see how price actually played out from there. And then from there, we can just go into some trading techniques that I use in my everyday trading, right? So I'll just go ahead and share my screen here.
Yes, sir. Let me get that added to it.
Right to it. All right, so you should be able to see my screen now.
Yep, got you pulled up.
Awesome.
Yes.
So I'll go ahead and clear this. So from last week, right, and this is all 1 week worth of trading here. We kind of had the idea of, okay, we had this upward trend line going, right? Mm-hmm. But what we noticed was as price was coming, I'll just take this here to clean it up just a bit. I was actually anticipating a break of this trend line here. I thought we would see a push above, but it actually started breaking through. 1 second, guys.
Just take that off so you guys don't have a brain aneurysm from the infinite mirror.
All right. So what we were looking at was this upward trend line, right? And we started talking about what psychological numbers were, right? We know that 10,000 is a really clear psychological number in terms of that it's going to attract a lot of people, right? People feel safer taking action from around this rather than, what trading, at 9,780 per se, right? So having a psychological number of 10,000 and we barely broke above and couldn't keep it, couldn't keep above, right? That was my first sign of, okay, we're not seeing enough buying pressure to be able to actually break through and sustain, right? So what we noticed was along this trend line here, and I'll just draw it again, right? Along this trend line, what we had was price tapping off, but every time it tapped off that trend line, it got smaller and smaller, right? So we saw this big impulse to the upside, and that was a good distance, right? A couple days. We also saw another tap off of that. But what we started to see was those taps started to get smaller and smaller, right? Which means that every time it bounced off of the trend line, the moves, the impulse, they got weaker and weaker, right? To the point where eventually price started to squeeze, and we finally started to get that break beneath this trend line, right? From there, it was just a sell-off, right? After we saw that break of trend line, where a lot of buyers, right? So you have to think of the psychology behind buyers, right? What are they doing at trend lines? At trend lines, when they get in profit, and they buy again and they go in profit one more time, they're feeling good, right? The euphoria is happening. So whenever they come back to that trend line, they're feeling that same euphoria of that past trade, right? They're expecting price to break above, to rebound nicely and give them some profits. But they're not taking into account that every time it rebounds off of this trend line, it's weaker and weaker, right? And as you can see right here, we started to just barely bounce off, and then eventually just broke through, right? So at this moment, when price breaks through, all of these buyers from this area are now trapped in that move, right? They thought that price was going to rebound even higher. Price came down, they bought again. They thought it was going to rebound higher. It bought again. Price came down. And that same continuation happens over and over and over. By the time it breaks through, they're already trapped within multiple buys, right? Because every time price came down to that trend line, they were expecting it to catapult up. So they're most likely putting one buy, two buys, three buys, four buys. And then by the time it breaks through, what happens, they're so deep in their buys, they have no choice but to pull out, right? When they pull out, that creates more sell momentum, right? When your stop loss gets hit, that creates, when your stop loss gets hit and you're buying, you turn from a buyer and you're now a seller. So imagine all of these sellers being, all of these buyers getting their stop loss hit, right? They're eventually turning into sellers, right? And that's what here. Price broke through. It started taking a lot of stop losses, creating more sellers, and then that's why we started to see that continuation down, right? And that is overall. Now that we've broken through, I can see this honestly just continuing to dump, right? There's right now in my opinion, there's no. We like Alejandro mentioned, right? We need to see some form of accumulation phase, right? We need to see it accumulate first, and then we can potentially go up, right? But at this moment, there's nothing in that I can see that will scream, hey, we might start to rebound. I would even give it a few days. Hopefully, it just hangs around this area, but potentially I could see it try to retest some of these lows. And continue that way, right? So I just thought it was really, really cool that, that trend line played perfectly in terms of just supporting it up until it didn't. And then it actually just ended up, breaking through and pushing down lower. So
Kenny, if I can interject,
yeah.
So when the price dumped, actually, the one you mentioned about the stop losses, do you think that was a purposeful stop loss raid, or do you think that was just like coincidental?
It's
like it was manipulated for a stock.
It's tough to say, right? Because with Bitcoin, we have honestly we don't know who's behind all of these big moves. Right? If it was some form of institution and someone who actually plays by the rules and knows what they're doing, I would then consider it a probable stop loss. This definitely, right? Because in the terms of trading, we have especially in Forex, right, or stocks, we have two types of trading. We have the retail traders, and then we have the institutional traders, right? Institutional being the smart money, the big banks, the big banks and institutions, right? They're the ones behind the move. So we kind of already know, well, these big banks, they're looking for these specific moves. They're looking for specific stop loss hunts, right? But when it comes to Bitcoin, it's so anonymous. Could have been big institutions coming in for stop loss. Could be, right? But it's just harder to say because, I don't know who's behind any of these.
Right. Right.
In terms of this looked clearly to me like a retail trap, right? So, trapping a lot of the buyers, and now it's just a little too late for them to take action. They're most likely out of the market at this point. But yeah, definitely.
What's the next level you have your eyes on? Are you eyeing up 8,000, 8.2K?
Yep. I would look more towards those psychological numbers. So 8K, right?
Yep.
We have a huge, this is what we would call a liquidity void, right? Liquidity voids are extremely fast moves that, they create almost like gaps in the market, right? So this right here has left what we like to call in institutional trading levels of imbalance, right? Levels that have not been filled yet. So you can see, yes, we did come down and tap, but we never really filled, there's still a gap there, right? In here, there's still that gap that has not been filled. It came down, it tapped, but it didn't fill it. So I would look more towards 8,000, right? Psychological, if we break through 8,000, then I'm looking at like 7,500. And that's how I like to look at Bitcoin. I don't like to be too precise because of these extremely big wicks, right? If you're try to be too precise, from my back testing, you're gonna get whipped out. So I like to just go for the general areas of these psychological numbers: 8,000, 7,500. If we break through below that, 7,000, right? And just play it as they come, right? Look for these accumulation phases, right? Distribution phases. So I think once we reach down here, and we're just creating lower lows, lower highs, lower lows, lower highs. So what can follow next would definitely be a lower low, right? Just to continue that bearish market structure.
Yeah. I mean, I think we can all agree we're kind of like cautiously bullish here in the short term, as long as 8K and 8.8K continues to hold. But as soon as 8K fails, I think we're gonna go on a very, very slippery slope. If not immediately back to 6K. Now, are we gonna dip below 6K? I sure as hell hope not. But I don't think a 6K retest is out of the cards at all at this point.
We can also look at this area here, right? And just using basic market rules, right? An area that was once played as a resistance area, right? We had a resistance area here, can then in the future play as a support, right? So as price continues to drop down, we could see this level here play as a major support. It did play as a resistance here. And then from here, potentially, and that's your 7,000 area, right? So as you mentioned, if there's no hold there, then I'm most likely looking maybe here for another hold. And then, your 3,000, which would be an amazing discount, right? I'm hoping.
Oh no, yeah. If it goes down there, the risk is minimal. Like people will be freaking out, like I was at 3.8,
Exactly.
but even though I'll be in the red, there's so much upside.
Exactly. There's so much opportunity from down here. So, I wasn't able to capitalize on this one, but if we do get another push downward, you can bet I'm capitalizing on that next one, right? Because I do believe Bitcoin is here to stay for the long term. So the only way it wouldn't be here for the long term if it just kept tanking completely. And I personally just don't think that's in the picture.
Yeah.
Yeah, I think there's so much cash on the sidelines right now that even if we do, retest 6K or even 7K, I don't think we're going to go that much below it because so many people still have, a little bit of that stimulus check money sitting in their accounts. So many people are kind of taking a cautious kind of sit back and just sit on cash approach that, I think any little dip is going to get quickly bought up. But then again, it would be a very Bitcoin thing to just fucking dump, quick 50% in a day again. So, you always got.
Go ahead.
It looks like we got a request here from the very own Johnny Dollar.
Unibright.
Requesting to look at Unibright.
Unibright here, right? And mostly what we try to do is, maybe. So what I'm noticing here, Johnny, is price is very choppy, right? As you know, sometimes trading view doesn't capture as well as you know, the candlesticks formations as they could be. So unit right here, and I'm trying to find it against the dollar, right? So we can actually put a monetary, maybe Unibright against Bitcoin kind of gives us something that's a little more manual. Okay, right. So this isn't too bad here. But what I'm seeing here is almost the same thing, right? Where we're looking at this area here now, right? And what we can do is use a fib, right? We love using fibs. Fibs are extremely useful in terms of trying to gauge where price can potentially return to before creating another impulse move upward. So if I were to use a fib on this here, and this is UBT against Bitcoin, it's not the same as it would be against the US dollar, but they have exactly, it's very similar. I'll use the US dollar here, right? So if I use this fib, I'm not going to measure this entire move all the way to the top, right? Simply because this right here could have just been almost like a fluke. You know, price hasn't gone way back up here to really test these levels again. So the real move to me looks like it's from here. That impulse move looked like it's from here to here, right? So that's what I'm going to measure instead of using this entire move, right? So if we take a fib here, we can start to gauge some levels, right? Whenever we cross, and this is the Fibonacci tool, right? Whenever we cross below 50% is when we start to consider it as a discounted level, right? You can think of this as when you go to the mall and you're shopping for a pair of shoes, right? If you walk into one store and you find that pair of shoes for 50% off, you're more than likely to buy it, right? But what happens when you leave that store and you go to another store and you find it for 61% off? Which one are you more likely to buy now, right? You're more likely to buy the more discounted price. So that's how trading is also thought as well, right? As price continues to come down, you know, the 50% could present some buying opportunities, right? It could present some good buying opportunities, but we're more likely to look for a more discounted price, right? So the best discounted price that we like to trade off of are, and this is just, a little bit. All right. So the discounted price that we would really like to look for are that 60% off, right? That's 705, that's 70% off, which is often known as your optimal trade entry. Your optimal trade entry will come from your 705, right? You're 70% off. Once you hit that 78 level, you should only be seeing wicks in this area, right? If you start to see candle closures below this level here, it is now not a valid Fibonacci projection, right? Within that 78%, you should only be seeing wicks. You should not be seeing any candle closures. If you're starting to see candle closures below this, you can then take this as an invalid setup to use your Fibonacci, right? So as price continues to drop, I would be looking into these zones here for more potential buying opportunities, right? Not until it crosses over our 50%, which is our discounted area, right? That's equilibrium. That's when price, you know, and a lot of professional traders, a lot of banks, institutions, that's when they start to consider price as a discount, right? You never want to buy price, you know, buy anything if you're not getting a good discount off of it, right? So that's where we start to gauge that discount is at that 50%. So I'll most likely be looking where price accumulated in the past, right? And it looks like price accumulated around this area here. And then impulse from there. So I would be looking heavily at the 61.8 in this case to then start producing some more buying opportunities. And, you know, target right back up to your equal highs, and then potentially long term, you know, somewhere up here in this area.
That 618 level, man. Such a critical fib to watch, man. We've seen that play out in so many charts, so many moves.
I love them fibs.
It's exactly. And you know, the 61 is what I noticed to be the more respected one in cryptos, right? In Forex, I would most likely be looking for the 70 or the 78, but in cryptos, I see a respect way off that 51.
Yeah, crypto loves that 618 fib level for sure, for sure. Well, Johnny, I hope that answered a few questions for you. But thank you, Johnny, for submitting that request. And you said you wanted to go over a few other techniques, continuing from last week, Kenny?
Oh, yeah. So I'll go ahead here and, you know, I'll select oil, right? Oil is very, very notorious for creating did we go over liquidity voids?
I think we did. Correct, Alejandro? We did talk about liquidity voids.
We did last week, but we could always do a quick refresher for those that weren't on, or because I mean that was a new, for me example, that was a new thing. But maybe the chat has something else that they want to learn, so they can chime in. But I wouldn't be opposed to doing the review.
Awesome. Well, we do have you know, I have more topics here that we can definitely cover, right? Which is liquidity.
Sorry to interrupt. After this, Lance says if we can look at Ethereum, I would like Ethereum as well.
Yeah, most definitely. We can go ahead and look at Ethereum. So,
a lot of eyes on Ethereum right now with ETH 2.0. You know, only 4 years away now. It's only another 4 years. I know there's a lot of eyes on Ethereum as it, you know, continues to hold above $200, and a lot of people want to look at that chart. So we could definitely take a look at it.
It is catching my eye as well. It's about 200. I'm like,
So there's a really nice technique that I love to use on top-down analysis with the Fibonacci, right? Fibonacci in cryptos is in my opinion, is amazing, right? So what I like to do is I will go to the weekly, right? And I will draw out my fib from the weekly last impulse. So we're on the weekly here. I can see that my last impulse move, right? My last big move was a sell from this area up here all the way down. So that's exactly what I'm going to mark up to get that overall picture, right? And if you notice, it already looks like, you know, naked eye that we're probably rebounding off that 61.8 area right now, right? So here we are, right? Just off of a quick, simple fib, we have that impulse move down, and then we have the retracement move, right? The retracement move is a lot slower. It's a lot less explosive than the impulse move, and that's what prepares for the next leg down, right? So we do see a nice leg down, which is that impulse. We see a retracement. And what can this be? This can be potentially another lower high, right? So we have a lower high, lower low, lower high, lower low, and then this could now be another lower high to potentially either come back down to these lows or create another lower low. So this is what I'm seeing, this last impulse move here. And I'll just draw the fib one more time to make it clean. Awesome. So as you can see, we've been respecting the 705 very nicely, right? Came up once, rejected. We have here what is known as a bearish engulfing candlestick, right? Simple candlestick patterns, right? An engulfing candlestick pattern is whenever we see, in this case, a red candlestick is pretty much eating up this candlestick. It's almost like Pac-Man, right? It's engulfing it by more than 100%, right? So price came down and actually closed way below this low. So that already lets me know, hey, there's some selling pressure within this area, right? Is it enough to send price down? It looks like 1 or 2 more weeks of testing, and now we may be preparing for that move down. So if we're on the weekly perspective, let's go into the daily and try to get some more information, right? Let's see what's really happening within that area. Awesome. So I would consider this entire move instead of moving your fib from here, right? You know, this right here, it's more so, this was just like a mini pause, right? Price just stayed there for a little bit and then just tanked. So I would consider this entire move as one move rather than one move and then another separate move, right? So if we're looking at this entire move, we can start to gauge, and I'll just move this closer so we can see the levels a bit more. We're right around this area, right? We're right here and we're actually producing some rejection, right? If we dive in a little deeper, this here can be considered a Morningstar, right? Morningstars are reversal candlestick patterns, right? Reversal candlestick pattern lets us know, hey, this uptrend may be coming to an end, right? And what that looks like is whenever you see a green candlestick, and then you see a candlestick that's a little smaller, right? Often known as a doji candlestick. And then that next candle is a red candlestick that engulfs at least, you know, you can take 60%, right? 60% or above or more, right? So if we're looking at this, 50% would be here, right? 50% of this candlestick, 50% would be here. 60% would be here, 100%, 120, 150, right? So in this case, we can see that price is actually trying to engulf it, you know, nearly, it's more, if I zoom in here, it's more than 50%, right? Those are signs of price getting weaker from the upside, right? And we can also see, you know, real quick, this right here is called a evening star, right? Morning star would be the same thing, but flipped in reverse. Evening stars happen at the top of a trend, right, towards resistance, and morning stars happen at the bottom where price is rebounding or a level of support, right? So if I just delete this here to make it cleaner, right, we can start to see some formations of bearish, right? We see a big push down, which creates, notice this, right? We see price created, it pushed down below a low, right? This is what we know as a sign of weakness, right? It's a sign, or SOW, sign of weakness. It's a sign saying that the buyers are getting weaker, right? Because if they weren't, if they were still strong, price would have rebounded from this area and never created a lower low. Make sense? So just making sure. Cool, no questions. So here, right, we can see a sign of weakness. We can see that price is creating somewhat, right? It's not complete yet, but it's creating some signs of these buyers are getting weaker. So from here, we're starting to, awesome. We're starting to see now that you know, price is creating somewhat of evening stars, right? Some form of candlestick price action, letting us know that, you know, potential bearish movement can be coming in play. And it also makes sense, right? Especially with the correlation between all the cryptos and Bitcoin, if Bitcoin is giving signs of weakening, most cryptos and altcoins are going to also experience that same push down, right, in some form or another, right? It's very rare that Bitcoin tanks and Ripple and Ethereum push up, right? Bitcoin is just like the mother lode of it all. So if we're going through, some retail perspective, right, let's start looking for traps, right? If we're able to identify different traps, we're able to trade outside of those traps, right? So trend lines are usually very, very big on traps, right? It's just, majority of the people out there who are trading off of trend lines. So you have to think about it. If majority of the people are seeing the exact same move, then they can't all make money. Someone has to lose, and it's usually the majority that loses, and it's the small percentage that actually takes home the bacon, right? So if we're noticing very similar to Bitcoin and what it was doing, we can see that we're starting to see a nice impulse. We got a rebound, right? This created the trend line. These 3 points created the trend line. So I can do something like this, right? If these 3 created the trend line, I can just extend this, extend right, and now we have that full trend line, right? So what we're expecting is these guys, every time price comes down to this level, they're gonna be expecting some form of a push off of that trend line. So here, we see a nice push up. Awesome, we get an impulse move off of there, great. We get another bigger impulse move, awesome. And what do you expect? What do you think when price comes back to this trend line, people are going to start doing? They're going to start buying off of that trend line that has produced them previous buys in the past, right? And notice what price is doing now. The taps are getting smaller and smaller, right? They're getting weaker and weaker. Had this tap, right? This tap should have to consider this trend line a strong trend line or continue the upward movement. This move off of the here should have been somewhat of a bigger move, right? Because that would confirm that the trend line is still strong. If we're not seeing that move off of this trend line anymore, then it's getting weaker. Every time it touches the trend line, it's getting weaker and weaker. And it's only fooling the novice traders out. It's only fooling people who are trading off this trend line, right? So what can we expect? It already looks like it's trying to break through. In the next day, if we see a melt and breaks, I believe that it can just continue coming down, similar to Bitcoin, right? And it's almost that same setup. These are just a little bit behind, right? If we go to Bitcoin, somewhere here, somewhere here, somewhere here. Here it is. Right. If we go to Bitcoin, we almost saw that very same thing, where we're starting to see that break, right? And we actually, where was it? Oh, it was off the 4 hour. Right. We're off of there. Now we're starting to see the break, right? Every time it came down, it started getting weaker off that trend line. And I'm just going to take this off here, right? And now we're starting to see that break, which is very similar to Ethereum, right? So let's just, now we're in the day, right? We were in the day, now we're in the 4 hour, just to start confirming price action, right? Let's see what we can continue to see and see if price action is matching up with our buys, right? So we see this large trend line here. That's showing weakening. Every time now that's bouncing off this trend line, it's getting weaker and weaker. And now it seems that we finally just broken through, right? So now going into the 4 hour, we can actually pinpoint, right? And I'll be generous. I'll say this right here is now the break, right? this right here can be that break that starts the downtrend movement, right? So if we're a little more accurate, right, we see all of these taps off the trend line, but it's visually clear that these moves produce way bigger moves, right? And now that it's tapping off of there, it's almost like we're getting this sell pressure now, right? A break above this, like I said, no, no analysis is just concrete. This is the way it has to go. This can easily, this fake below this trend line easily create enough momentum to break above and then keep pushing up, right? But if we see a retest within the next couple hours or days, right, break below a hold, and this could very well be that retest, right? It's retesting off this low, retesting off the trend line that it just broke, right? And potentially continue its way downward. And it just goes with the overall picture that is, if we use the fib again, right, we're in that area where we're inside of that 61 area discount level. BTC moves everything. Yep, it sure does, Lance. It sure does, right? So if we could get a good idea of what Bitcoin is likely to do, we can pretty much gain. So hedging, right? I know that came up in last session, right? It's hedging, right? You can hedge cryptos by maybe shorting Bitcoin and then buying Ethereum at a different price, right? So is if you're selling Bitcoin and you're selling Ethereum and you're selling Ripple and all of these coins, you're essentially hopping on the same move every single time, right? So to kind of diversify it or kind of protect yourself, maybe buy one and sell the other, right? And just make sure that your risk management is up to par, right? But I do see now that price is kind of squeezing into this little vacuum, right? So what the next move is most likely going to be very strong. I think potentially it could, because of price action, right? Because of what it's printing here, I think that it can be a push downward. But we still do see this trend line that, it hasn't broken through yet. It's still respecting. A nice daily break would then confirm my bias.
Yeah, I think we're at like a critical kind of make or break moment where everyone is kind of sitting tight and waiting to see, like, okay, is the uptrend going to continue? Are we going to remain bullish, or are the bulls going to lose steam, and are we going to keep moving to the downside? And for anyone that watches Bitcoin daily, we all know whenever the price kind of gets stuck in a sideways movement and it really gets stuck inside these wedges, we know a big move's coming soon. It's just a matter of figuring out, is it going to be a big move to the upside, or is it going to be a dump? So
Yeah, the doji.
That's the hard part.
Exactly. And the reason that I am more leaning towards the bias is not because I don't believe in Bitcoin, but just because the last impulse move that we did have was a bearish impulse move, right? It just shows that we're in a bearish market until we're able to create bullish impulse moves, right? And this last big impulse was a bearish one. So this move to me is more of a retracement instead of a bullish market, right? It's just retracing back to potentially push down even lower, right? Maybe not even lower, but to revisit some lows, right? And then from there, maybe catch its breath and then continue higher, right? But considering the fact that this on the daily is a pretty big bearish move, this looks pretty weak in terms of strength, right? And just trickling up, taking its time to trickle up. I think it's taking its time to just drop down. Let me go ahead and go into the 1 hour real quick, see if.
There you go.
Right. So now it kind of becomes a little more clear where it's like, okay, now did we really break that trend line, right, showing more signs of weakness, lower low than this low, showing signs of weakness, a retest to that trend line, that could have been it to, you know, especially 200, right? We're at the 200. That itself could be a psychological level, right? $200, 230. I know has produced some massive shorts in the past for Ethereum, right? Somewhere around here. Yep, 227. So, you know, that's this next day, next 2 days could be very, very big for the crypto, in my opinion.
And go ahead, Alejandro.
Yeah, no, I was looking at some charts recently, and actually, it was logarithmic regression was done on, Bitcoin, since, of course, Bitcoin's always like the S&P 500 index for like, well, we all, you get the reference, but the analogy. But they were saying that the fair value of Bitcoin as of right now is probably around 8.3 or 8.4K. If you were to look at like Bitcoin from its beginning to its current event. So I would even dare say as of right now, it's slightly overvalued. I don't want to say that because obviously, like, even though my average is below 8K, I just want more gains. But I would say even that could be an indicator that right now it's currently above its fair value, according to logarithmic regression.
It's overvalued, right? And
Mhm.
that can be, when I hear that can, to me, it's like, when I refer to a pair that's overbought or oversold, right? It's been stretched out to its max, and now it's like some form of retracement is imminent, right?
Right.
So yeah, definitely.
Not by much, only like 400, 8.4, 8.3, but still, yeah.
Another thing, guys, that I love to do on my crypto pairs is I like to use moving averages, right? And on TradingView, you can find them fairly easy. I'll give you here moving averages. It's an indicator. And the setting.
My bad. I'm trying to. Okay, there we go.
That you can use is 200. Right, so I use 200. My style will be like a nice gold orange for this one, and I'll just make it a little thicker. Right, your 200-day moving average is, and you can see this on the daily as well, right? That will give you the overall bias, right? It'll help you form your overall bias of what, if price is above your 200-day moving average, you want to be looking for buys, right? If price is below your moving average, you want to be looking for sells, right? In this case, though, price is just ranging, right? It's not really trending upward. It's not really trending downward. Notice how here, when price broke above that 200 moving average pretty strongly, more buys came along, right? Price dipped below, more sells. This was more of a fake. It dipped back below, way more sells, right? So right now we're like you said, right? We're in that critical spot, and it feels like when are we gonna get out of this, right? When are we gonna finally see some form of trending move, right? But your 200 moving average can be a really good basis for what price is likely to do. And look here on the 4 hours, right? When price dipped below, came back to retest that 200 moving average, it created way more sells. Price broke above, came down to retest that 200 moving average, it created more buys. So now we're really, really right on it, right? So it's gonna be it's a battle of the bears and the bulls, right? Can we hold below? If we hold below, if we can break above and retest, right? That's just another confirmation of, okay, where are we? And it's just funny enough that we're right on it, right? We're right on it. It's not above and it's not below. So this whole area here is just, I would just wait it out. Get some clear sentiment, get some clear idea of
I would say that.
And just wait it out for a little bit at least, right? It doesn't hurt. You'll be in your account way more.
The biggest thing that concerns me, if I could just share my screen for a second and just kind of switching gears a little bit from the technical side to the
I
fundamental
love seeing.
side, is the difficulty right now. So the last time the Bitcoin difficulty adjusted, it was about -6%. Right now, we're pretty behind pace. We should have found almost 1,000 blocks by now. We're only at 829, so we're 168 blocks behind. We're only at 83% of the pace. The next difficulty change here, it's going to be a double-digit one, somewhere from a range of -11 to even up to -16%, which is pretty big in terms of a difficulty adjustment downwards. So I will say that kind of does add a little weight to the bearish sentiment here. I mean, totally understandable though, for there to be a big difficulty swing to the downside with the halving just happening, and the smaller to mid level miners being pushed out of profitability. But definitely keeping a very, very close eye on the difficulty and on the speed at which these blocks are being found. But yeah, I mean, regardless, it's a huge make or break moment right now for not only Bitcoin but for the bigger crypto space in general. And it's crazy to see. I don't know if you guys followed the normie markets today. I know Alejandro is probably ecstatic that the Dow jumped
Did
500
really well.
points today. Yeah, what are your takes on that? I mean, do you think the markets are just going to go right back to all-time highs, and that they're just going to completely ignore 30 million unemployed? And
So my take, since I'm doing that, basically all 5 trading days, is right now it's getting the bullish push because of Moderna with the vaccine and all the other companies having successful phase 1 and phase 2 trials with the COVID or coronavirus vaccine. And secondly, I know we kind of make jokes all the time about Florida, but Florida, at least Miami-Dade and Broward and Palm Beach, are definitely opening up completely. Well, not completely, but the beaches will be opening up sometime next week. There's been a decision on the NBA. For example, the NBA is going to be performing out of Orlando, not in Las Vegas, but at least we know the NBA is going to come back on. There's a bunch of things going on. People are getting more in their cars, so there is a bullish sentiment right now. I personally think that's not going to last. I think that by July, when we get the Q2 numbers from April, May, and June, I think companies are going to get hard, or going to hit hard with a bunch of negative earnings reports. Maybe it's expected. I'm not sure. I don't think it's going to be pretty in July. I could be wrong. No crystal ball. But yeah, regarding crypto, I would say right now in the BTC, I would say right now for the bet on the Doji right now, I would say bearish. And yeah, regards are going to go sideways, but I think it's safe to put bearish on both. But short term in the S&P 500 in the market, I say this week's going to be bullish as fuck, and then people are going to can I curse here? People are gonna people are gonna like just not get the FOMO, but they're gonna get too complacent. And I think that's gonna come crashing down on them soon because you can't escape reality. So,
and
what's your take on?
Yeah, I saw. I follow, because I trade forex, right? So I follow the U.S. dollar a lot, and we have a lot of economic data that's being released on Thursday, right? The unemployment rate. So what I noticed last week or like 2 weeks ago, right? What they did to manipulate, and it's just, they get creative each time, is they went ahead and projected so high of a unemployment rate, and then when the actual numbers came out, it was less than expected, so it's bullish, right? It's good, right? So it's just like, what? Come on, it's just trickery. That's why you got to take it with a grain of salt on trading days like that, and can't really depend on the economic release, because even though you can have such a good idea of what to expect, right? We know the high number of employment coming. That is inevitable. We know that. But are they gonna allow it to actually reflect the numbers as it should be, or are they going to manipulate the numbers? And that's what we kind of saw the last 2 weeks, and why the U.S. dollar hasn't really tanked the way it should have, right? It's just because they go ahead and forecast this huge number, and then when it actually releases, it's lower than what they forecasted, so it's bullish. And, you know,
right, that's the mentality.
That's just something that I've been noticing the last couple of weeks. So I tend to stay away from like Thursday, when you know, and if I am positioned in any trades, I'm either, you know, just looking to either get out or they're not involved with US. So, you know, it's going to be interesting, right?
Yep.
And I know from a Forex perspective, the summertime is when we do the least amount of trading, right? It's, you know, people are out, are barbecuing, people are enjoying their times outside. They're not really at the computers trading and actively doing it. So, you know, summertime is a lot less of a volume being traded. So in terms of, you know, that can probably help us, give us a little leeway in terms of time so that they can catch up. Then once the summer comes around and fall comes, we can rebound into Q3, right? And then see a nice little momentum. But yeah, it's going to be interesting the next couple summer days and see what's going on.
That's a very good point. Sorry, we keep on interrupting. That's a very good point, Kenny. I feel, but do you feel like this summer would be the exception because of coronavirus? Like people maybe are going to still be inside, or, you know, be fearful to gather and go to barbecues or travel for that matter.
I think that it's a little bit of both, right? I think more so just naturally, like even years past, for decades, summertime is just considered the slowest part of so when you have that on top of coronavirus, I think that can even just compound the effect a little more, right? Just because summertime is like dead trading. It just is what it is. Hopefully you make your money the first half of the year, and then summertime is a lot slower, and then Q3 and Q4 is where you really start to pick it up. But yeah, I think more so just from a social standpoint, people have been locked inside for so long. They're just getting ready to let loose. And with that is just more distractions, less trades being taken, and people enjoying. So, you know, it's a little bit of both. I hope that we can still keep some validity that's been going, because it's been awesome, right? Just to see price moving. Yeah. But I'm expecting it to slow down. We're getting into June. Yeah, I'm expecting it to slow down, and that will probably help price catch up a bit in terms of being inflated so much.
It seems like there's going to be maybe some good buying opportunities for not only crypto, but for the whole, like, you know, as Matt always loves to say, the normie market come July. If my prediction, or maybe what you're saying is, you know, like, it does come true. So I'm just like, don't despair, guys. Just get your wallets ready if you still got that check, or you're getting money. If you're not in this shit like a lot of other Americans.
Yeah, what's the famous nursery rhyme this time of year? Sell in May and go away. I mean, I know we don't trade off of nursery rhymes, but like every time we get close to summer, I always just hear that pop up. Sell in May and go away. But yeah,
it's stuff.
I agree with you though, Alejandro. I think like short term, these next few weeks, we're gonna keep being bullish. Like the money printer is gonna keep churning. We're still gonna be creating, you know, $125 billion out of thin air, doubling the monetary supply, basically overnight. I don't think there's gonna be a serious correction until, like you said, those Q2 numbers come out, because what I've seen a bunch of companies doing is they're even refusing to give guidance. They're refusing to forecast, you know, what their end of the year numbers are, because they don't even want to disappoint people. So it's kind of like you said, Kenny, where they're just manipulating it and they're not even going to project it. So then when the numbers do come out, oh, it's bullish because we beat the projections that didn't happen. So it's all it's all fugazi, bro. It's all bullshit.
All the earnings reports that come out recently, even in this month of May, have all been from Q1. So again, to like a novice trader or someone that's not, following that, oh, look at all these May earnings reports. Well, that's because the company's waited that long, number one. Number two, Q2 has the month of April, which is going to be the worst damn month in terms of all that. So,
right. Yeah, because it really wasn't until like the end of March, right? Mid-March, end of March, when shit really just fell.
And the whole month of April was shut down. So like Q2 has April, and that's gonna be that's what I'm scared of. I don't know what a lot of these companies are gonna share, or if they're gonna share at all, which in itself is very bearish. So yeah.
Who knows? Who knows what's gonna happen? I'm just glad that you guys are here to kind of help us make sense of this crazy world, because it sure is a fucking whirlwind, man. It's hard to keep up. It's hard to keep up.
Well, I guess if we're right, get that money ready.
just waiting on that next stimulus check, baby. Waiting on that next
Mnuchin. Oh my god.
But yeah, thank you guys so much. If anyone in the audience has like a last minute request, throw it out there. But I mean, we covered a lot today for you guys. We covered Bitcoin, we covered Ethereum, we covered Unibright for our good friend Johnny Dollar, talked about the normie markets, liquidity gaps. Again, just an hour of absolutely golden content that we're giving to you guys for free. So if you enjoy this type of stuff, please, give us a like, subscribe to the YouTube channel, follow Kenny at Creator Cito. Check out his website,
right up there,
ecomway.com. I'll throw his website up here. He's also an e-commerce genius. But stay woke, guys. Stay woke out here.
Keep them minds working. Stay educated. Like use your time wisely, I guess. Yeah.
Absolutely. Anything you want to add there, Kenny? Any last minute golden nuggets to drop?
Just like to say thank you, right? Thanks for having me. It's always fun to come over here and share my little golden nuggets, and also learn from you guys from the more fundamental side, right? Because it's the more knowledge you take in, the more power you have, right? And knowledge doesn't always just come from school and books. It comes from people around you who share that knowledge. So keep learning, guys. Watch out for the manipulated numbers, because they're coming. They're coming. They're coming hard, right? But be prepared and always use good risk management, right? That's exactly. Good risk management is the key to anything. You can be wrong 50 times in a row, but as long as your risk management is up to par, you should still be in the game, and that's what counts, right? Longevity. So thanks, guys. Thanks for having me.
Got it.
No problem. Thanks so much, Kenny. Thanks, Alejandro. See you guys next Tuesday. Be safe out there, guys. Smash that like button. Subscription. Please. It's all we have left on this point. Keeping us alive is the like.
Stay safe from all the rain, guys.
Every time you don't like the video, Craig Wright, gets another day in hell, another day in heaven, whatever you want to say. So thanks again, guys. Be safe. See you next Tuesday. Take it easy.
Peace.